All right, guys, we are live. JT, how you doing today, man?
Pretty good, man. How about yourself? It's a sunny day. How are you?
I can't complain, man. I've been getting up earlier. Me and Micah had a pretty good workout this morning. I just put out our Macro Monday video, so far a productive day, man. You can't complain.
Yeah, I think I'm already at 100 push-ups. No, I think I stopped at 70 actually. I'm believing it at 70, and the goal is 100.
Yeah, we hit
So,
good old arm day today.
all right, let's just turn it into a bodybuilding episode. All right, guys,
Here we go. All right, so today we're going to be talking about, this is a segue to our previous emotional intelligence video. If you haven't watched that one, give it a watch. It's like the foundation for any hobby you want to do, and investing is just another hobby. If you think about it, it's something you do, but your emotions act as like a baseline through which as your filter and how you look at everything. So definitely watch that one if you haven't. This is going to be a segue and build on top of that. We're going to be talking about the same principles and how they apply to investing, how to manage your emotions so that your emotions can be on your side and not work against you, so you can be a successful investor. So, like I started the last episode, I have like a bunch of quotes on my wall, and one of them is emotional intelligence. So I'm going to read the definition, just like I did in the last video, and we're going to talk about how that applies to investing. So the definition I have is abilities such as being able to motivate oneself and persist in the face of frustrations, to control impulses and delay gratification, to regulate one's moods and keep distress from swamping the ability to think, to challenge your thoughts. Okay. So before we even start on that, you always hear people say you want to go off logic and not go off emotions when you're investing. And the reason why is because investing is one of the few things in life where you don't want to listen to your emotions. And let me explain why. And I kind of talked about this in the last video. We have this reptilian brain that is centuries old, right? Back in the day before civilization, we were living out in the wild, and if you saw something, like you saw a bush crumble, you didn't know if it was a tiger or a lion, so it was fight or flight. So your emotions have to alert you really, really quick so you can run, right? Now, living in the modern world that we live in now with cities, and we're not as wild in that regard, they don't really serve you. So like when you're investing, you can be in a solid investment. Like it's people that I was going out with Jada and her friends to this restaurant called China Live in San Francisco last week. She was telling me how her parents, not Jada, but her friend, was telling me how her parents had like a very large Google position during the GFC, and they sold it because they panicked. Everything was going down, so they sold. And then the girl, she was super young at the time, but when she got older, she was like looking at the old papers, and she saw on there like, had they held those Google stocks till today, even with the dip that we're in right now, they would have $5 million. And she told her mom that, and her mom started crying. And she sold because of emotional intelligence. Like her reptilian brain kicked in, told her she was in danger. She, remember, like you said, it's fight, flight, or freeze. She flew out and missed out on a lot of gains. So it's like you want to use your emotions when you're conducting fundamental analysis. If you feel good about the team or something like that, that's good. But if you doing some digging on someone and you see that, maybe they went to prison for money laundering and you invested into some financial platform, you want to listen to your emotions and something like that. So that's why you don't want to listen to your emotions, right? Because investing is that one thing to where, like I said, the market in the short term is a voting machine, and the long term it's a weighing machine. The fundamentals and the price aren't always in a line, right? Sometimes the price is higher than the fundamentals. Sometimes it's lower. And when it's lower, that's what you want to be buying. And when it's higher, that's when you want to be selling. But your brain, like when things are down, it's like, oh, you want to sell so you can avoid danger. And when things are high, it's like, oh man, things are going to keep going, so you want to buy when you actually want to do the opposite. Why it's good to have a plan in place. So JT, before I unpack that first point, did you want
to? No, you already unpacked the first one.
Well, no, I did.
No,
I kind of did, I guess. But it's more I want to say.
No, the most important part that sticks out to me is not letting the stress essentially cloud your emotions. And that's a great example of it, right? So if you're an investor, which they would classify themselves as investors as they accumulated a large Google position, right? And so if you're an investor and things start to at least look like they're going south on you, right? The first thing that you think of is protecting your assets. It's a logical thought. Protect yourself, protection. Now, the issue is where all the color starts to get thrown on that, meaning like, okay, if I don't protect my assets, I can't pay my mortgage, and then I'll lose my house, and then my daughter won't have food, and we're gonna have to go stay with parents or whatnot, blah, blah, blah. And so all of that color on top of the distress of markets potentially crashing is what caused them to sell. Now, if they had had a solid investing foundation in which you could eliminate your emotion, so your system or foundation of investing is so strong that no matter what happens, you can see, okay, well, we're going to bounce back, or let me just stick to my system and I'll be okay. And that's really, when it comes to investing, the only thing that's going to stop the emotional side is if you have some type of system in place that kind of counteract your emotions, because we're all emotional. I still get FOMO, for example. Like, I'll get FOMO when something happens and it makes me want to buy, like the NVIDIA debacle. And I haven't been paying attention to NVIDIA, but NVIDIA, seeing the gains, they were up like 200% over the last year. So I'm like, shit. Okay, let me go ahead and accumulate a position. But I actually decided not to, just because I just felt like I would have been buying at somewhat of a top, or at least very close to it, which was true. And I would have actually fucked myself up in that regard, because now my capital basis will be a lot smaller. If I had invested 50K, for example, it might be worth 45 at this point. It's like, okay, cool. Now, at that point, my emotions would be like, damn, it's only 5,000. So go ahead and just take the money. Go ahead and get your money out before you see more downside. Now, if I was a believer in NVIDIA long term because of their AI plays, the emotion would be overridden by my systematic logic, essentially, and say, okay, fundamentally, I know NVIDIA will have a strong upside, have a ton of upside in the next like 5 years. I can afford to hold my cash in there for 5 years. And so, eliminating emotion, I'll just hold. No biggie. Things are going to happen. So yeah, that's the part that sticks out to me most, is not letting the stress cloud your emotions. And that could obviously apply to multiple aspects of your life, like your relationships with people, your relationship with your lady, kids, if you got kids. I mean, there's a lot that could affect the way you invest. And that's why it's always appropriate to have some type of safe space where you can go alone and just have those thoughts at least come and go in a coherent way. So that way, when it comes to like conceptualizing your investments, you're not coloring them with a ton of emotion. It's just, yeah, you recognize that there's emotion there, but going back to the system, going back to your safe space, that allows you to kind of gather your thoughts and make the appropriate decision for your situation. Because it's always different.
Yeah. And to expound on one more thing on that, like when it comes to being able to persist in the face of frustrations, you also want to be able to thrive in the face of frustrations, because some frustrations are opportunities, right? So like, for example, we were talking about this on the Macro Monday during the .com boom. And again, obviously you want to take profits. I recommend like having if you really believe in something, like maybe have a bag that you won't sell for 10 years, but like maybe like 10-20% of the investment, but the rest you have profit taking targets, so that once things go up, you can take some off the table, but you still got a bag just in case. You don't want to put your current lifestyle at risk for hopes of a new one. So having that aside, speaking on the .com bubble, so you had Amazon, which is like one of the most valuable companies in the world, right? And Jeff Bezos was saying like, people are just selling the stock. People are worried about the company, but I'm looking at all the company's internal metrics and everything's growing up. We're selling more books, we're selling more of this, we're growing here, we're growing there. So he wasn't really worried about it. So when something like that happens, and you've already taken profit, most people would sell in that scenario because they probably didn't have a plan in place. But you, who had your plan in place and you took profits, now when that drops, if it isn't a fundamental error in the technology or the business, you should be buying. you should be buying. Like right now, crypto market is down. Has nothing to do with the fundamentals. It has everything to do with corrupt centralized parties, centralized entities, and over leveraging, which caused forced selling, meaning people had to sell even though they didn't want to. So you want to be able to thrive during frustrations as well, not just persist.
When it comes to thriving through frustration, that's kind of like literally one of the things in business in general that would probably be a huge determinant of your success, because it's kind of all frustration. So
yeah, it's never gonna be just like a smooth ride. I mean, sometimes it is.
Look, 8 out of 10
super early, but you know, that's
8 out of 10 scenarios will be frustrating in business, and then you work so hard for that 2 out of 10. That's what you work hard for.
Yeah.
And you know, happiness lies in the hope of future achievement, and usually that's what you're hoping for. Those 2 out of 10 situations that would make you feel ecstatic temporarily, but it will make you feel ecstatic either way. And so most of it's going to be frustration. So you got to have tough skin. You know, I always put an analogy towards fighting. And in this case, it would be, look, you can spend an entire fight getting beat up. I mean, just beat up. Just beat up. I'm talking about wrestle, body slam, suplex, elbow. I'll use a more anecdotal example. Sorry. So one time I was in the gym and I was sparring this kid. Shout out Namahoy if you ever see this, bro. He's a beast, by the way. Hawaiian beast like Max Holloway. But anyway, he was really known for his leg kicks. I'm a pretty good striker, so I was doing what I was doing. But for some reason, man, in the video I was checking, but it just didn't matter. He was just throwing them things with some heat. You know, and he eventually put me down. I actually hit the ground. Now the fight went to the ground. Now in my mind, and I don't remember what was in my mind. It's almost like nothing was in my mind. But thinking back on it, I like to think like, oh, I had a temporary moment of like, oh shit, I'm done. You know, but instantly that went out the window when he jumped on me, because you don't have time to think. You know, he jumped on me. He starts grounding, pounding, boom, boom, boom. I find a way to reverse it. Long story short, I take his back, you know, and I ended up choking him out, and I actually won. And the only reason I think I got that fight is because I was able to persist in the face of adversity. In the adversity meaning you can't fucking walk. The dude took out your legs, so you can't get up anymore. And that's ultimate adversity. Now it's like he has the ultimate advantage. You know, I was able to still choke him out and win the fight. And it's in your makeup. A lot of people in that moment would either give up or just lose. But most will give up if you get put down from a leg kick, especially if you're not getting paid for the fight. You're going to give up. But training that willpower muscle, that's going to translate to business. And so now when I go through something a lot easier than getting my legs taken out, which is probably like potentially losing money, but you should be investing in a way where you can't lose all your money in the first place, right? And so potentially losing money, that adversity hits. But I've trained my mind so hard in other areas of life that it's going to come back and interrupt that potential pattern that's trying to create itself of fear. And so if I'm able to push through that in an investment sense, analogous to winning a fight in MMA, well, you'll win that investment. And now you feel good about yourself, whether you won because you cashed out in time, you won because you have a ton of gains, or you won just because you were right on the entry and you're going to hold it out for 5 years. So training your brain and your willpower to persist through frustration as well as adversity is like number one in terms of getting success as a business person. If you don't have that, you're going to fold. Yeah, or anything. Like you're going to fold. So yeah, that's what I'll add to it.
That's good stuff. No, that's good stuff. Let's move to the next point, which is controlling impulses and delaying gratification. So, guys, delaying gratification, you have to wait for your investment to go up. You know, a lot of people want to invest and become a millionaire overnight, but the reality is it usually takes time for the price to catch up with the fundamentals and exceed the fundamentals, because they always do, or usually do. So, and this goes back to having a plan in place. And this is also why we teach like yield farming in our course. So we make it a little more pleasurable to wait. And I'll explain why. People bought Bitcoin in 2008. And for those of you who don't know, Bitcoin was the best performing asset of the last decade, right? But there's been many times when it was down 70, 80, 90%, like multiple times. Had you had a plan in place to delay gratification, the plan looks like saying, hey, I'm going to take this percentage of profit at this price. I'm going to take this percentage of profit at this price. I'm going to take this percentage of profit at this price. The reason why you do that is because you don't want to have to rely on your emotions, because if it goes up, I know so many people who, when Bitcoin went up like 200%, 300%, 400%, they sold everything because one, they didn't understand the fundamentals. And that's going back to what we were talking about, doing proper research. And two, they didn't have a plan in place. So their emotions was just like, yo, take off what you can get right now. And, that's it. And everyone ended up regretting it. So you want to delay that gratification, because that's how you're going to win in anything. And when you're investing, you're basically getting paid to be patient.
You could delay your gratification a bit too much sometimes, in my opinion, like that Dogecoin.
That's why you want to have a plan.
Exactly. You have to have a plan. Like the Dogecoin guy, I'll talk about him because we don't know. His portfolio of just Dogecoin was worth at one point like 3.6 million, and he never sold. So his basis was like 100,000, by the way. So he would have came up, and he never sold. And now I think there is no chance for Dogecoin. He's fucked.
I think it'll come back to the next bull market, but like still
to be worth $3 million. I mean, the only way is, if it's just getting pulled by like Bitcoin's Thanos effect
and Twitter, which I think it will.
I think it's going to be more the Thanos effect when it comes to Bitcoin. I'm talking about the Bitcoin dominance, by the way, guys. When I say Thanos effects, I just watched the Avengers the other day, so I'm thinking about Thanos. But anyway,
Jesus Christ.
But yeah, Bitcoin dominance, is still pretty high. So when things start to move to the upside, we'll see some more Dogecoin activists there. But yeah, it's good to have a plan, because that guy is probably kicking himself in his ass. He probably cut his foot off and just kicking himself in the ass, because you were pretty homeless before that, and now it's like, man, Jesus Christ.
Got too greedy, man.
The point is, it's good to have a plan to protect from the downside in either way, because assets don't move in the same direction forever. It's so it's good to be prepared. If there is a pump, and if you're investing into an asset, you probably expect a good amount of price appreciation personally. And so your plan should be something along the lines of, if it gets to this number, I'm definitely taking profit. And for him, it probably should have been, I don't know, $1 or something. I forgot what the Dogecoin price movement was like, but he should have had something in place. Once it's worth $3 million, take your money. I mean, he would have been a super winner if he took it at $1.5 million when his portfolio was worth that. He would have been a super winner if he took it at 700,000. I want you to think about this. At multiple levels, he could have won, but instead, his mind was clouded by an ideology as opposed to seeing, like you've been talking about, fundamentals, or he probably didn't look at technicals at all.
He was drinking the Kool-Aid for sure.
Drinking the Kool-Aid, pure emotion.
We've all drank it.
What happens? You fall off a cliff. The only time I've drank it is in 2017. I bought Bitcoin at like 21,000.
Then you bought the peak. It didn't even get to 21.
No, bro. If I pull up my old Coinbase, I bought it on Coinbase, I'm pretty sure the number was like.
He bought it at 15K too. I remember in Tanner Room.
No, for sure. But, bro, it was one purchase. It was like 20,800. I mean, right under the peak.
Was Bitcoin like your first time investing? Like that was my first investment. I think like that was my first time.
No, my first investment was Wendy's on E-Trade. This was back when I was like in college.
Okay, I know that situation. I got you.
Yeah, it was very, very early. So here, Wendy's.
Dividends.
It's funny, if I would have held Wendy's, let me look at where they are. It wouldn't have been a ton. I bought it at, was it not 13? It was like $3. So I would have made a good amount of money. It's $18 right now. Over time, if I just had kept DCAing into it. But it is what it is. I was a young whippersnapper. It's like back in the day, I would invest in like take it out as quick as I put the shit in. And probably a lot of people have been through that. But here's another thing. Make sure you have money to invest. you know, because when I was investing when I was younger, it was just, if I get $200, I'm trying to buy $100 worth of something, you know, and that was every time. But I would need the $100 probably in the near future, and so once I cashed out, it'd probably be worth 80 because I didn't make any money. And now I actually just lost money, probably a lot over time, just because I wasn't able to actually have a plan, and I just kind of flew by the seat of my pants. You know, if it felt good, I bought it. Once it didn't feel good, I sold it, whether it was at a loss or not.
No, that's good stuff. So two things I realized I didn't explain, and you made me think of something else too. So the first thing is, like I said like 10 minutes ago, we can show you how to make it pleasant while you wait, so delaying gratification isn't as hard, and that's yield farming. So providing liquidity on decentralized exchanges between certain price ranges and making money, passive income to facilitate trading. So like, for example, let's say you think Ethereum is, you want to take profits on Ethereum at $3,000. Right now it's at like 1,500. You can provide liquidity on Uniswap v3 in multiple different tranches. You can have tight ranges, a more narrow one, and a wider one. So that way it's always in range. Risk management, and you put the least amount in the tightest range.
A tranche is like a range, basically. That's what he's saying, guys.
Yeah. So you can put money in there from the price of 1,200 to 3K, and as long as it takes for price to get to 3K, no matter where it's at, you're generating passive income whenever people are buying ETH for USDC, or vice versa. You know,
yeah, you make money off the transactions. You're effectively bringing in fees. You become a fee generator.
And we have the best yield farming course in the world. Like, we show you guys how to do market making, just like institutions. Like when you guys go on an exchange and you buy your Tesla stock, it's not Robinhood who holds the inventory. It's companies like Deutsche Bank, Goldman Sachs, Morgan Stanley, et cetera, who are saying, hey, use my liquid. They'll give the exchange, let's say 500 million in Tesla, 500 million in cash, and they'll say, use my liquidity when the price is only between X and Y, and they profit from the bid to ask spread, aka the trading fees. So when you're paying those high fees, it's not just the exchange eating, but it's mostly the market makers eating. In Web3, these financial institutions aren't legally allowed to market make in decentralized finance. So it's everyday people like you and I, and that's why I say it's the best passive income opportunity in the world if you know what you're doing. So it's literally, you're getting paid to sit in a limit order. Like a traditional limit order says, hey, here's my ETH, exit me out of the position once it hits 3K. But using Uniswap v3 and another platform called Aperture Finance, which allows you to enter and exit upon certain things, whether it's time or price. Watch this video. I made an in-depth video on how to use it. You can literally provide liquidity, and then once your price is hit, you're taking out. So not only are you selling your assets, but you're also taking out your fees as well. Like, man, that's the best thing ever.
No, I'm an advocate for yield farming and providing concentrated liquidity. It's like, man, you know, the biggest risk is effectively like slippage, but other than that, it's hard for me to fathom, okay, how can I lose all of my money? The only way that I can see that, and somebody please correct me if I'm wrong, is if the platform itself kind of did something shady and, you know, things got shut down. Other than that, slippage is the risk. But by providing concentrated liquidity, you actually get rid of even that risk. So I'm like, okay, if you have a good capital basis and you're not sure where to invest that cash, and you're already investing in the crypto space, and like Vince said, understand it. If you don't, you're going to get fucked. So make sure you understand it. Yes, I'm an advocate for providing concentrated liquidity. It is probably the easiest way to sit there and collect fees in any type of market, whether it's a down market, your volumes are going to be shorter. But if you pick an appropriate range, you're still going to generate appropriate fees enough to keep you afloat.
Yeah.
And so, yeah, I mean, I think that's fantastic, actually. So, yeah, check out the course, guys.
Yes. It'll be going on sale next week, depending on when this video goes out. But we have a course, and then we have coaches that'll help you guys walk through, create a plan for you, all that stuff. Okay, and of course, shilling for now. The second thing that JT actually made me think of is, like, he was saying how he notices that, and this is him having self-awareness of himself. He noticed that he'll want to buy something and sell it right after. So an important thing when it comes to investing is knowing your personality. As a general rule, there are two types of investors. You have people who like to make smaller amounts of profits more frequently, which is what I would say JT is. And then you have people like me who like to make larger amounts of profit less frequently.
Man, you know what's funny? I think it depends. This is not a shot towards
That's why I said it's a general rule.
No, for sure. But it depends on what they have going on in their life, right? So like me, I like to think I know how to make money. And so, yes, people go through rough patches in life, but I know how to make money. And so for me, I like to use a skill to predominantly make like my big money. So I use a skill. Yes, investing is a skill, but that's not what I'm referring to. The investing to me is protection/growth. Now, there's always a potential for massive upside in one investment, but I never, like you said, I never like to rely on that massive upside. I like to think of it as, what's my yield I'm going to make on it? So if it's a 4% yield on a $100,000 investment, I'll take that. You know, if I'm making 4% on that, I'll take that plus potential appreciation, plus whatever I'm making in my daily life. And so now my money is literally always growing. And we did an exponential video, I think it was in the last EQ video, where we talked about exponential growth, right? So that 4% will start to compound. And obviously 4% is what it is. Sometimes you get 5. If you're providing liquidity, you may get 7, you know. And so if you're investing into corporate paper, you may get another 7. So like looking at it like that, protection/growth, yeah, that's, I think, what keeps me afloat, because I used to look for the big gains, like 100%, like 100%. You know, I'm thinking of a few. Storage was one. I don't even know if storage is still around. STORJ.
Oh, they're definitely still around.
Okay. Yeah, I rolled that from like, I don't remember the prices, but I don't know. I had like 200% basically. I got 200% in a day. I remember calling. It was in one day. I got 200%. Bro, I sold that shit immediately. Why would I hold it? Okay, boom. I got my principal plus 200%. So let me sell that. And I believe I put all of those gains into Chainlink immediately. And
JT is a true Link Marine.
Yeah, no, I let Chainlink ride for a minute. And, you know, I ended up selling at a pretty good time. Now, Chainlink was one of those also where I knew there was a chance for some like mass appreciation in the short term, but I was more of a believer just in the fundamentals of Chainlink. But within the span of that 2 weeks, my Chainlink doubled. And, you know, I'm like, okay, it's time to sell. So it looks like I'm a fucking genius if you're not talking to me, you know, but for me, it's just keeping my emotions in check. And, you know, I'm abiding by a loose system that I had at the time. It wasn't, you know, a full system yet, but I was abiding by that loose system. And so I was able to get those small profits, like you said, small profits. So I was able to protect and grow. And at the time, I was also doing a ton of real estate deals. So I was making like 30 grand a month. So during that time, I wasn't pressed to get another, you know, $50,000 on that. And that Chainlink, I ended up moving that to BlockFi. And I started earning, you know, this was when BlockFi was still doing 8.5% on Bitcoin. I was earning 8.5% on like $40,000. So it's pretty good. And I was happy with that. But once again, I looked like a genius because they ended up going bankrupt like 4 months after I took all my money out. And it wasn't me being genius. It was just me thinking from a protection standpoint, what else can I put my money in? I ended up putting that into more real estate deals, by the way. So yeah, I mean, yeah, there are two types of people, like you said. You know, there are going to be people like me where we want small gains and protection, and then there are people like you, just to pigeonhole us real quick. There are people like you who, you know, they want the massive gains. You figuring out which one you are will be one of the paramount things. I feel like everything we're talking about is paramount. So that'd be one of the paramount things that either determines your success or failure. Because if you don't know what the hell you're going to do, what are you going to do when your Chainlink investment goes from 2,000 to 30,000? What are you going to do? If you don't have a plan, you're probably still going to be fucked. You're probably going to lose it. You're probably going to reallocate it in a not so great way. Or you probably won't get any gains because you don't know what the hell you're talking about. So, you know, it's good to figure out where on the spectrum you lie. 100%. I would agree with that.
Yeah. And, just to give you guys some personality types, and this is just like I'm just scratching the surface here. If you're a more patient person, you're probably more likely going to be a more long-term investor, value investor. If you're more impulsive, less patient, you have a tougher time delaying gratification, then you're probably of the other camp. And there are wild success stories of both types. Like you have Warren Buffett, who is like one of the greatest investors of all time. He's famous for buying things and never selling them, or selling them after extremely long amounts of time, like decades sometimes. And then you have Jim Simons, who runs the most successful hedge fund in the world, in the Medallion Fund. They haven't taken on a new client in decades, and they're so good. By the way, people still haven't figured out their strategy, and
which is crazy, man. What the fuck? People really
they're algo guys. So algos are set up to like take profits, like more often. Like they're so good that they had employees try to sue them because once the employees left, they still wanted the fund to manage their money. Like, that's how good they are. Like, you're gonna manage my money even if I leave. So it doesn't.
Man, do you have an idea of their actual percentage returns?
Real quick. I haven't checked in a while, but they have like a 40-50 year track record, and it's over like 80% per year or something like that. 70-80%, which is super fucking good. Yeah. So it's like, if you were to ask me like what is the best strategy for me, it's the one that's most aligned with your personality. But like JT said, there is opportunities for you to mix both. Kind of like what I'm doing with yield farming, because I run a hedge fund, so I'm trying to offset risk and not let the portfolio drop too much. So I have a way to accumulate things passively, but I'm also holding things for the long term.
Man, 70-80% a year, that seems unreal, man. I wonder what their percentage is.
This guy
seriously,
he pioneered algo trading, by the way, like back in the 60s, 70s.
Yeah, Jim Simons.
He's a mathematician, and he was like doing code breaking for like NASA and the military and stuff like that. Super genius guy. He has a book called The Man Who Solved the Markets that tells the whole story. Definitely recommend. It's pretty good. You won't get any strategies out of it, but it's a good read nonetheless.
Damn, man, that's pretty insane, bro. Jesus Christ.
Yeah. So, okay, we got 2 more points here. The next point is we're going to talk about stoicism and how it applies to investing. So stoicism means the endurance of pain or hardship without the display of feelings and without complaint. Now, we talked about stoicism in the last one, and it's basically like how to overcome your fears and stuff like that. So if you're a people pleaser, you can do things like you're leaving out of a parking spot and you have someone behind you waiting, and you just sitting in the uncomfortability for like 1 minute, and you feel those feelings, and while you're aware of them arising, you ask yourself like, is this the thing I feared? Or like holding up the line in a Starbucks or something like that. So the reason why stoicism applies to investing is because we are social creatures, and there's a lot of times when you may invest in something. The best investments don't seem like a good investment at first. Perfect example. Think about 10 years ago, people coming up to you being like, yeah, I'm gonna have an app and have people catching cars, like talking about Uber, have people catching cabs via the app, and it's gonna overtake the taxi industry. You'd be like, that's a terrible idea.
No, we can even talk about Bitcoin.
Or Airbnb. Yeah, I'm gonna get to that last. Or Airbnb, like, oh yeah, I'm gonna have an app and I'll rent out the spare room in my house to strangers. Like, that sounds like a terrible idea. So it's like the best ideas don't seem like a good idea at first. And that's why you want to be doing your research. And Paul Graham of Y Combinator, he talks about like how to develop your brain to always be looking at things as business ideas. You can conclude that or apply that to investing ideas as well. If you're trying to invest in technology, picture it as a drop of water. And as it splashes, is wetting up everything, aka technology becoming a part of everything. And the opportunities are like, if it drops like this and then it splashes, the opportunities are on the tips where it's covering things. Perfect example, the guy who pretty much created communicating over the internet via voice. He was just trying to find a way to communicate with his girlfriend overseas without paying. So he's like, oh, I already understand software. It's the logical thing is to just put my voice in packets and send over internet for free. And that's the basis of Skype, WhatsApp, Zoom, like all these things that we do. And to people who are not in the weeds and at the tips, like I just said, it'll seem like a bad idea. So stoicism comes into play when you're at the table on Thanksgiving and you're showing people, oh, I'm investing into this Bitcoin thing. Like, if you didn't read the Bitcoin white paper, if you don't understand economics, if you don't understand game theory, if you don't understand supply and demand, if you don't understand inflation, it's gonna seem like a bad idea to you. And if people in your community are calling you an idiot, you're gonna not want to be called an idiot. So stoicism comes into play when you're like, you know what? I'm willing to sit through them shitting on me because I know that I did my fundamental research, and I know that I feel like in my heart that I'm making a good investment despite what these people are saying. And there's probably going to come a day where they come and ask me like, man, how do I get involved? Like, so many people have done that to me with crypto. Like they'll tell you not to do it, and then they'll be asking you how you did it.
100%. I still remember when I was looking at BTC, it was like 100 and something. It was under $1,000. And Angel was the one who, I don't know if it was that restaurant was called Raspados or not, but it's on like 24th Street.
I remember that day when y'all came home and y'all was like, yes, this guy talking to me about some Bitcoin stuff. And
bro,
like,
he was convinced. It was BitConnect though. And so, we did save ourselves in some way, but still, he was saying it's going to be the money of the future. Literally, I remember him saying this and I'm like, bro, no, it's not. And I'm right, but obviously it's like, fuck, if we had bought it at $157, he didn't speak English that well either, so it didn't help. But yeah, it just seemed like a fucking horrible idea. But it's like, of course, now looking back, bro, of course I wish I even just gave him $100. $100 back then would be worth 20-something thousand now. So like, that's pretty good.
Maybe more than that, bro. Let me do it.
Probably. Even with the wholesaling, when I first got into wholesaling real estate like 5 years ago, I would get people who don't understand the business, which was a ton. I feel like a lot of people understand wholesaling now, but like a ton of people didn't understand it. And, they just didn't really get how I could make money at all. It seemed like I was throwing money down the drain because I was spending like $3,000 a month.
260K is what it'd be worth.
Damn. Okay.
Because it's 260x because it's 26,000.
That's true. Man, I'm sorry, guy, who we met that one time and we didn't buy Bitcoin from you.
He probably like, it's okay. I did.
What? No, he was a BitConnect. They lost everything.
Well, he might have bought on Coinbase and got smart. You never know, but probably not.
Nah, he wasn't. No, I'm just playing. I don't know. but yeah, man, I forgot what I was saying. But yes, everything seems like a bad idea at first, usually. Unless, it's like Airbnb, the way you explained it, yeah, it would seem like a fucking bad idea. But that actually seemed like a pretty good idea when it was first out, which, that did play out.
Well, that's because the event that they started in, which was like, I think it was inauguration or a lot of people coming in for like the presidential something, Barack Obama, and people were running out of hotels. So he's like, oh, I'll just rent out my spare room. So in that sense, but you wouldn't have thought it would have scaled up to be this big thing, though. At least I would.
I don't know. Yeah, I don't know. That one seems like one of those, like, damn, it seemed obvious, But yeah, I guess we'll never know. But yeah, things do seem bad at first, though, is the general point. So you have to have some type of conviction that you're willing to stick, and foresight that you're willing to stick with in the face of people shitting on you. Because they will, 100%. Your best friend will probably. If I made an investment that Vince thought was bad, he would probably shit on that investment and always end the conversation like, well, you never know at the end of the day or something like that. But it's
most other friends who aren't as sophisticated aren't as nice. They'll just shit and end on shitting it.
Well, they won't even shit on it. They'll shit on you for making the decision.
Exactly.
They know nothing about the asset.
They'll make it personal. They'll call you an idiot versus saying you're making an idiotic decision.
Right. And then that's when you start to feel like, oh, I'm going to show them. And that could get you in trouble in the long run. And so it's good to kind of roll with the punches, Roll with the punches, let them roll off of you. And yeah, just keep a level head, man.
The last point I want to touch on, and this is a perfect segue into that, Invest in what you understand at a visceral or emotional level. So like we were talking about in the beginning of the video, there is always going to be frustrations. But if you are convicted and you understand at a visceral level why you're investing into that thing, not just because you think the price is going to go up. Like, for example, Bitcoin. Let's use Bitcoin as a good example. If you understand the Bitcoin halving, for example, you understand how Bitcoin is decentralized, and you're like, basically what the halving is every 4 years, roughly every 4 years, but it's every 210,000 blocks. The reward that you get for mining Bitcoin gets cut in half. So you have these miners who have a computer that is trying to guess like a random code, like picture like a random 36 character code mixed with letters and numbers on the wall. You have your computer trying to guess them as fast as possible. The more computers, the more power you have, the faster it'll spit out, the more like you are guessing it. This happens every 10 minutes. Someone guesses it. And when you guess it correctly, you get all the fees from that past 10 minutes, and you get what's called a block reward. Right now, the block reward is 6.25 Bitcoin, if I remember correctly. But every 210,000 blocks, that block reward gets cut in half. And this is why the final Bitcoin won't be mined until year 2140. So if you understand that, and you understand supply and demand, and you understand like, hey, this amount of Bitcoin is coming onto the market every 10 minutes. If that gets cut in half and the demand just stays the same, supply and demand says that the price has to go up. So if you understand that and you're investing, let's say 2 years before the halving, like let's say you were investing in 2018, you know, the halving's in 2020, that will help you wait versus if you don't know that, you're just like, oh, this shit's not going to go up. It drops down to 3K. You like, oh shit, Bitcoin's dead. Like so many people were saying Bitcoin was dead. But that's because they didn't understand. So you only want to invest in things that you understand, because that is what's going to help you weather the emotional storm. Not just weather it, but thrive in it, like we were talking about, and being able to say, hey, oh shit, this shit dropped, and be excited. Like it's like going to investing. It's like a store where when things go on sale, people run outside of the store. But you, as a smart investor, are like, oh shit's on sale. So I'm about to buy as much as I can for the cheap.
Yeah, man. Just to add on to everything we've been saying, and I wanted to bring this up earlier, but I forgot. But your relationship is very important. If you're not a single person, if you're going through a lot of turmoil in your relationship, if you're going through a lot of turmoil, maybe your spouse is just kind of on your ass because, you know, she's worried about the money. Or if you're the woman who's an investor in a relationship, he's worried about the money. There's some relationships like that. And you don't have that system that we keep referring to for yourself. So there's not a system that we could just give you. It's whatever your situation is, tailored to you, right? If you don't have a system in place, let's say you wake up in the morning. Now, when you wake up, I mean, it's literally breakfast isn't the most important meal of the day, but morning is the most important time of the day because it sets the tone for the entire day. So if you wake up and you and your spouse get into a big argument, bro, that's going to affect you the rest of the day. So when you go sit down in your chair,
or until you get it solved,
yes, let's say a lot of them don't get solved.
True.
So, you know, you go sit down in your chair. The first thing, it's almost like you shouldn't even think. You should just go out of habit because your system is all, you do it every day. You do it every day, whether it's your research habits or whatever it may be. Or if you're dollar cost averaging and you have a certain habit around that, whatever it may be, you sit down and that habit starts to take place. If you don't have that system in place already, bro, you're going to sit down, you're going to feel paralyzed, you're going to be mad. Man, I'm going to go and take all the money out there. Now you do something irrational, or you're like, I'm going to invest more money and I'm going to show her. You know, and that could be a recipe for this. Almost like gambling. It could be a recipe for disaster as well. So like the way, it's almost like you either have a system to supplement when you're in a negative mood because of some spousal situation, or, and this is not relationship advice or financial advice, by the way, just get the fuck out of a relationship.
None of this is, guys, by the way.
Just get out of the relationship. Sometimes if you don't want to be homeless, the situation may be better for you if you're able to focus and get yourself together in that you can create a more systematic outcome for your life. So you can aside from the unpredictable nature of life, you can start to predict certain things that will happen, or at least have an idea of certain things that will happen because you do the same things every single day. And yeah, recognize when you have someone in your life and they're actually like just toxic on your mind, because the quicker you can recognize that, because it happens, you get leeches. And when I say leech, I mean people who, not intentionally, but they're sucking the life out of you. And so it's important to recognize that, because if you don't, before you know it, you could be sleeping in your car in fucking Albuquerque and you're like, holy fuck, how did I end here? How did I end up here? And it's probably because you just let your mind get out of hand because you let somebody else take control of it. And so it's important to understand your situation in terms of like your spouse and you and investing. If they're completely separated, like comfortably, because mine's is separated. It's almost like when I sit down and I start doing research or looking at an investment, I actually feel better. No matter what's happening, I just feel better. I don't know what it is. I just love it. But it's not like that for everybody. And so you need to realize what's hurting you and what's helping you. And those relationships, man, they have more power than you think. You got to think about it. If we're social creatures, that one person that you've opened up to in every way, if you guys don't have a plan to last forever, that is opening you up for hurt, whether it's your emotions, which will lead to hurting your investments as well if your emotions are hurt. And so all these things come into play. Literally, when you're clicking buy, all of that shit is affecting that button click 100%. So yeah, it's important to know your spousal situation. I'll leave it at that.
Yeah, you actually just reminded me of one more thing, and then we can wrap up. I want to talk about diversification. Now,
having multiple women. No, I'm just playing.
Oh my God. So diversification is basically having like multiple assets to offset risk, but your risk could be also determined by your conviction. Because like a good book I recommend everyone read is Market Wizards. The guy interviewed like the best investors of like the 70s, 80s, maybe 90s, I forget. And you'd be surprised at how many, like people say it's multiple ways to skin a cat. Same with investing. Like what one person will say, I will never do, this is the one thing I'll never do. That's the basis for how another guy made billions of dollars, right? And that goes back to knowing yourself. But people always say you want to be diversified. You know what Warren Buffett said? He said diversification is insurance for idiots. So like going back to the whole know yourself point, like if you, for me, I believe if I'm super, super convicted on an asset, the more convicted I am on that asset, the higher the percentage it makes up in my portfolio. And Warren Buffett is known for, he'll be holding 1, 2, 3 companies at a time, like back in the beginning when he was running Buffett and Associates, his hedge fund. But you have other people who are holding like 10, 20. Like back in the 2021 bull market, JT, you remember, I was texting you like, hey man, these are the new buys I had for today. Everything was just going up. I'm just buying all this stuff. That makes it so much harder to track. So I found out like the best thing for myself, and as like a more predominantly a value investor for my personality type, I prefer to hold fewer assets that I'm convicted on. And hey, if it's other things that I'm bullish on, but not so much, I'll wait for these assets go off and I might cycle my profits off into something else. So I wouldn't always recommend diversification. It depends on how much you're able to research, how convicted you are. But if you're not, then it may be better to like be invested into some type of index like the S&P 500, which holds like 500 stocks in different ratios and stuff like that. So yeah, diversification isn't always like a thing I recommend, because what will happen is like, man, like for example, Chainlink. I knew about Chainlink in 2019 is when I first heard about it. And I was buying it at $1. Between 98 cents to $1.02 is when I bought most of my Chainlink. And I knew in my heart, like, man, this is fucking strong fundamentals. Like, I know this is gonna be good. And I had other assets just because I'm like, oh, this one's probably good. This one's probably good. But I knew Chainlink was the one I was most convicted on. But I'm like, oh, I'm just gonna be diversified. Chainlink did a 50x. Had I listened to myself, and this is like I said, this is one of the times when you actually want to listen to your emotions, when it's backing up the research that you done. Because someone was telling me, like, bro, just go all in on Chainlink or go more all in on just like Chainlink, ETH, and Bitcoin. I would have so much more money today versus just trying to be diversified just because people are saying it.
No, I agree. I agree with that 100%. I think about that quite often, actually. Like, man, I shouldn't have fucking bought the Ethereum, because I had a lot of Ethereum too, but my Ethereum was like very flat. And you know what? I bought it. It wasn't a great price. I bought it at like $1,600, and I think that's where it's at right now. So it wasn't a super great buy at all. I think it was 1686 to be exact.
Yeah, compared to Chainlink, it's nothing. It doesn't even hold a torch.
Exactly. So it's like, yeah, I should have during that time. Yeah, the base would have went from 20,000 to shit. Who knows? I had a lot of money on Coinbase. Yeah, man, I agree with that. It's sometimes it's good to go all in on something you're super convicted in, but you gotta understand the shit out of that project. If you don't, I don't recommend it, of course. But even for me, like I'm gearing up. It's like, yeah, we're in an uncertain time right now, so it's not always the clearest move. Like, damn, should I do this or should I do that? Sometimes I don't fucking know, so I actually do nothing as well. But one thing I've been gearing up towards, because I want to keep monitoring it, is industrialized REITs. Industrialized REITs, real estate investment trusts. They're in a commercial real estate space. So when you think of commercial real estate, it's not all office, by the way, which is getting destroyed. You got industrial, you got storage, you got hospital. So you got different types of real estate investments just within the REIT space alone. And you're still getting, 4 or 5% dividends. And so that's something that I've been looking at, that I want to have a large capital base in going forward. But we'll see. I'm going to keep monitoring things for a while. But I know I'm gearing up to buy a fuck ton of REITs, because I don't mind getting 4% here, 3% here, 2.5% here, another 4.5% here. So now my money is, once again, it's being protected and it's growing. And in that next bull run, REITs are going to do fucking fantastic. I can just guarantee you that. So yeah, I'm going to be buying a fuck ton of REITs. I'm going to be buying physical real estate as well. And, crypto investments like normal. And so although I'll be diversified, it's not as diversified as one would think at all. Because it's not like if real estate falls or real estate REITs falls, Chainlink is going to go up. So it's not like some perfect correlative hedge or anything like that. It's just the things that I have extreme conviction in the long term. And while I'm making money on a daily basis, what I do using my skill to make money, obviously I can afford to hold out for, 5-10 years on those investments. So I just know I'm going to do really well over the next decade. And it's going to be fun to look back at this video after 10 years of doing them and realize how much money we made.
Facts. Because you got to learn from your mistakes. That's another thing. Like, you're going to mess up in investing. You're going to feel like shit. You're going to want to quit. That's another thing where you want to go against your emotions. They're just trying to protect you from pain, but pain is how you learn. So,
yeah. And the last thing I want to say is I'm excited to do this in person. So we're going to have a cool setup, guys. We're going to be in person. So it's going to be fucking fire.
It's going to be busting, no cap.
Yeah. And also, Ian Dunlap, we're going to make a video on Ian Dunlap. We have to. It's just outrageous, man. It's just outrageous. Cool guy, but Jesus. I mean, you guys would never hear me say that I have the winningest percentage of any investor in the fucking universe. And if I did, trust me, I would prove it, because that's something to be proud about.
Seriously.
But yeah, you got guys like that. Anyway, I don't want to get stuck on them now, but we're going to do a video on that, the master investor from Earn Your Leisure, just to name drop real quick. And you guys probably got a sense of how I feel about that. So
yeah, I hope you guys got some value from this. Like we said, this is not to be taken as financial advice, but subscribe if you got value. Subscribe to our personal channels, J Mansion and Crypto Noah. I talk about all things DeFi strategies, yield farming, crypto. JT talks about.
I talk about the Federal Reserve, the economy, crypto, whatever I feel is necessary to the game that we are playing right now.
Indubitably. And our course is going to go on sale next week. So if you want to learn how to get your strategy together, how to yield farm so you can generate passive income with the best opportunity that we'll see before the banks are allowed and they saturate the yields for you and I. If you want to learn how to do proper research, proper technical analysis, how to make sure you never get hacked so you don't end up like one of these stories that you see in the news, check us out. Know it outside XYZ. Come in with me. Coming soon. So with that, thank y'all for tuning in, and we'll see y'all on the next one.